Hi everyone, welcome back to this week edition of RHO Market Chat. Like what we do always, we do a recap of what we did last week. And today I want to share a little about the Dow Jones trade plan, the US market rally and the risk. Then we want to talk about gold again and a couple of gold stocks that I'm looking at. And then we give a little update on the current US coronavirus situation. And I want to talk again about the Hong Kong Stock Exchange and what is fueling this current rally on Hong Kong Stock Exchange. And also, we want to discuss whether it has got more steam. All right. Talk a little bit about DBS trade plan. And then we talk about the week ahead, the economic data for the week ahead. All right, let's dive in straight. So last week we talked about the danger of the resurgence of COVID cases or the fear of the second wave sweeping into US again that could cause another lockdown. Of course, we know there will not be any lockdown, but so far, the increased cases of the COVID-19 has caused some turbulence on the US stock market. All right, so last week I was bullish on the Hong Kong Stock Exchange. I explained why. I said that, a lot of US listed Chinese stock is on the way home. All right, and that could benefit the Hong Kong stock market, particularly Hong Kong Stock Exchange, all right? And for those of you who are afraid, all right, that we could see a market correction with the US market, at a lofty peak, I said that you could long you could long the Hong Kong Stock Exchange and be shorting the MSCI Hong Kong or the Hang Seng Index. All right, talk about the China automobile sector that's taking off with sales growth going up, and two stocks that I'm watching, Geely and Gangfeng Lithium. All right, and also shared about the STI trade plan, and so far it's been doing pretty well. All right, so we have we have hit the support at 2596, and today we went slightly below that, and that is we have hit today 2573. Okay, so it looks like we are on the way to 2550. Okay, I shared about UOB trade plan, and I said that could likely be touching 2030. That is the demand zone, and around about $20, we could see a rebound from UOB. All right, and I said that when we see Nasdaq, all right, breaking above the 10,000 mark, all right, the whole Wall Street could be due for a market correction, according to my trade plan. All right. And just last Friday, I predicted that Dow Jones, right, will drop 700 points to hit 25,000. All right, it happened exactly according to prediction, and that was spot on. All right, so the Dow hit 25,000. In fact, it just went slightly below that. And as I'm talking now on the start of a new week, 29th June, on the first day of trading for this week, I could see the Dow opening, the Dow Jones are trading 150 points up. All right, so that was a good trade plan. All right, calling for a 700-point drop, and it did. And these are the short-term trade plan for Dow Jones, all right? And it is still valid, all right? So watch for the 25,000. If it breaks, it could go to 24,655. But then, the Dow is really being kept at 25,778, all right? All right, so what has been causing, all right, the current euphoria in the US market, all right? So the Wall Street continued to march on. It continued to squeeze higher into the quarter as fund managers are forced to chase a rally, which oftentimes has been led by retail trading from home. All right, so this time, right, things are special, okay? The way the market rally is really led, right? Not led by the big boys. This time it is led by the retail investors, all right? They come like a swarm of bees and they just ate the market up, all right? And the risk is that when you see retail investors, coming in the market in a big way, we want to be cautious, all right? So the risk is that the market has been so focused, all right, now on the reopening narrative, and then the second wave concern with investors factoring in a V-shaped recovery. So the market on later part of the year, or maybe just, maybe a couple of weeks, couple of months down, could start to realize that the monetary policy is too easy, too much money has been printed. It could be just a fake rebound. And then, the market could then have suffer a correction. And you know what to get out first, all right? The growth stocks are the most at risk. So the growth stock is the most played stock today, all right? The stock that have gone up the most today, and those, when the market comes down, those will be the one that will be the most at risk. So what is really driving the current market up, all right? It is the governments hand out all over the world, especially the US, right? The US government has been providing $1,200 check, all right, to everyone in April, all right, to all Americans, all right, to April, to help them keep up with their bills during the lockdown. And a lot of this money actually found their way into the stock market. All right. So according to Envisnet, Yodlee Securities Trading, so this is the second and the third most ranked or common used trading, right? Is the most common used for the stimulus funds provided to the Americans. The data showed that Americans who earn between 35 to 75,000 per year increased their stock trading by roughly 90% over the week before they received their checks. Investment firm Fidelity had a record 1.2 million new accounts in the first few months of 2020. Trading app Robinhood reported 3 million new accounts during the first quarter. So it is a swarm of inexperienced investors coming in to the stock market, a lot of them for the first time, and that is fueling the stock market rally now. So the danger is for us, right, to watch out for this rally that has been dominated by newbies and first-time investor and trader, right? If that fizzles out, all right, many of these traders could be caught on the wrong side, and that could pose a serious risk to the current rally. And the other thing I want to talk about is, there's so much money printed, boy, Today, the Fed's balance sheets, right, stood at 7 trillion, all right, and that's having grown eightfold since 2007, since the great financial crisis. Okay, and when this balance sheet grows endlessly and never string, that is called debt monetization. And with so much money printing and the debasement of the US dollar particularly, and that is why I have been very bullish on gold. And I believe that gold will continue to march, and this trade plan that I've shown since 15th of June, all right, is still working pretty well. And today we have broken above the 1738 resistance. All right, last saw it was 1772. Our next resistance will be 1792. And before long, a couple of months maybe down the road, we could be seeing 1923. And that is my target, all right, before the year end. All right, so if you are bullish on gold like me, all right, I want to be sharing with you a couple of gold stocks, all right, that could outperform. So I've always said that if you are bullish on gold, okay, the best thing to do, all right, is to be buying the gold stock, because the gold stocks give you a natural leverage. Okay, so this is Wheaton precious metal, and it is a gold mining stock. All right, it hit an all-time high of $47 pullback, and I believe it's on its way back to test the 47. It will break it, and then it will test the next resistance at $53. All right, and I'm bullish on this gold stock. Alamos Gold, also a gold miner. It is going back to test. All right, it's year high already at 1219. All right, I believe it's going to test it very soon, 1219, and it breaks 1219, it will go to 1366, and I believe by the end of the year it will hit $15, and that is according to my trade plan. All right, so I'm ever bullish about, so far, in the last couple of market chat, all right, last couple of weeks, I have been bullish on Hong Kong Stock Exchange, still bullish on Hong Kong Stock Exchange. I believe this is the story for this year, okay? So, and, all the reasons I talk about, so this is new catalyst, right? New growth catalyst that is crystallizing. And there are more positive development in some of the Hong Kong Stock Exchange Growth Initiative. Example, all right, the star market inclusion in the northbound, ETF inclusion into the southbound, and the renewed hope, all right, that A-share derivative will be launched, which means that the people in Hong Kong and foreigners now can trade A-share via derivatives, all right, and that will add a hefty volume, right, into Hong Kong Stock Exchange trading volume. So the structural and the long-term growth prospect of Hong Kong Stock Exchange, the opportunity present and this is what I'm talking about, presented previously, all right, that the relisting of the ADR, Chinese ADR from the US markets, all right, could give a boost, all right, to the volumes, and that will be good for the Hong Kong exchange stocks. Okay, so this is the trade plan, still going fine. All right, I started buying at 280, and a lot of you follow my trades. Okay, first target hit, you saw that when it hit 300, it was bouncing off here. Now it broke 300. My next target, 330. 330 should see a pullback. And after the pullback, all right, it will go and test the 365, which is my ultimate target for this year. If you have seen the market last Friday, it is gripped by, the fear of another wave or second wave, with a lot of state in US registering new highs in infections, all right, particularly the state of Florida, Texas, Arizona. But there's one thing that I want to bring to your attention, all right, is that we see, although we are registering new high in new cases of infection, but then what we are seeing also is a divergence of death, all right, and the death rates is getting lower as new cases going higher. So, for those of us who are, really bearish on the market and thinking that we are at the cusp of a second wave, it may not, all right, because of this statistic here. Okay, so this could be a case like SARS where the virus took a natural death, all right, or they will call in the medical terms mutational meltdown of virus. So it's like it's got a, it becomes less potent, all right, and the virus now becomes less deadly, and that is why we are seeing less new death, but yet the cases are going up. So we could be seeing, and a lot of experts are saying that this could be a sign that it picks. We don't know. Right? I don't think I have the answer, but this is something that we should look out for. It is not a preordained second wave, all right? So what we need really to see is the death rate picking up. If we see a death rate picking up, that will be bad news for all of us, and we could see then a new lockdown coming in. That would be very bad for the stock market. And then we are also seeing the Trump approval rating recently plummeting. All right, and with Trump's approval plummeting, especially when you're coming very near to the US election, I don't think he's going to lock down the economy again, okay? So the economy is going to continue to be reopened and to stay open because Donald Trump's approval rating is coming off, and he will try all means to not only hold the market up, but to hold the economy up. And there's no way he could hold the economy up unless he keeps the economy opening, all right? So there's one stock, all right, that is, I think, all right, the beneficiary of this increased test. So Donald Trump has been saying, all right, that the reason why the American has been having so many cases is because, all right, America does more tests than many other countries, all right? So back late in March, only 100,000 Americans per day were tested for COVID. But now on a daily basis, 500,000 Americans are tested. And that is what Donald Trump is saying. He said that is the reason why we're having such a high in new infection cases. And this company, laboratory corporation, all right, expects, all right. So Wall Street expects this company to earn about 150 million a month in sales from COVID-19 tests, and between finding active cases and identify folks from carrying antibodies. Okay, so LabCorp is a natural winner in this because testing can only go up, and LabCorp is one of the two giant medical diagnostic firm that dominates this sector. The sector in this country. So there's more tests for the COVID, there'll be more business for lab corporations. Look at this stock, you know, look at a good level to buy it, look at a support level. I should be sharing the trade plan next week, all right, on this stock, all right. So this is DBS trade plan. I think a lot of you asked me for this trade plan. I know, all right. I have a lot of requests and people asking me, Robin, where will DBS go? Okay, so this is a trade plan, all right, for DBS. All right, currently we have hit a support of DBS at 20.50, all right. But if it continue to come down, all right, $20 will be a good buy or a good time to get in. But if you ever hit 1960, all right, that will be a conviction buy for DBS. Okay, so took a bit long this week. Let me just wrap this up, all right? So this week, these are the important economic data. Look out for this, all right? And, that is the end of my sharing. I hope you enjoy it. I hope to see you next week again. Goodbye.